For my tax firm, there's always one interview question that I always ask. And the question is, how do you explain tax brackets to clients? And the reason why this is important is because it allows me to see how they explain things to clients. Because I already know that they should know what tax bracket and how it works in their head. But what is in their head to what actually comes out of their mouth is different. So if they're able to explain tax brackets with ease, like the client is a teenager, then that's actually a very good sign that they are a good tax professional. And if they're explaining tax brackets where it's overly complex or they're using a lot of accounting jargon, well, that's a sign that that's how they're going to talk to clients. And think about it. If tax bracket is the most basic thing that they should be explaining, think about something way more complicated like S corporations or business tax returns. And for one of the workshops I did for training other tax professionals, I actually use a visual to help explain how tax brackets work. So if you want a copy of this visual, just write brackets inside the comment section. This visual is going to use buckets and stairs to explain how tax brackets work. Now, a common misconception that clients have when it comes to tax brackets is that they think that whatever bracket that they're in, that their entire income is taxed at a flat rate. From zero to whatever they make is taxed at that rate, which is wrong. And we want to use this visual to help explain it and make it more clear for clients to understand that they don't need to forego bonuses or not take any extra income because they think they're going to be in a higher tax bracket, which will cause them to pay higher taxes. That's totally incorrect and totally a wrong assumption that they have. So by using this visual, we're going to explain how tax brackets work. And the way I like to explain it is that the client has buckets shown here and it goes up a stairwell. When they make income, the first part of their income, which is the water, they need to fill up this bucket right here. And the more income they make, the more buckets they're going to fill going up the stairs. So the first round of income, I guess you could say, is that in this 10% bucket, as long as they fill this up, which is up to $11,000, that will be taxed at 10% and only 10%. And then if this bucket gets filled up, meaning that they make more than $11,000, any amount over $11,000 will go to the next bucket, which is 12%. So the range for this bucket is $11,000 to around $45,000 being taxed at 12%. So they will only get taxed 12% for anything inside this bucket. Once this is full, then it goes to the next bracket. So meaning that if their income is over $44,725, then any income over that amount is going to be taxed at 22%, and it just keeps on going up higher and higher. And at the very end, I use the 37% rate, and it's a bathtub because it shows that this holds way more water, meaning that once your income goes around over $578,000, it's pretty much going to be taxed at the highest rate at 37%. So from $578 to $1 million to $2 million to $10 million, that's going to be usually taxed at 37%. And the second part of this visual is I actually use a real example. So I'll tell them that if there's income of $140,000, the way it's going to work is that the first $11,000 is 10%, so this bucket gets filled, and then it goes into 12%, and then 22%, and then the amount between over $95,000 up to $140,000 is only going to fill up about half of the 24% bucket. So meaning that from $95,376 to $140,000, that's only taxed at 24%. Anything below $95,376 goes into these other buckets down here, depending on what the income range is. So they actually physically see that only a little portion of their income will be taxed at the 24% rate, not the entire thing being taxed at 24%. Now, another thing I always like to point out to clients when I explain tax bracket is that if they were to get a bonus and it pushes them into the next bracket, that it's not a bad thing. Because say in this case, if their base salary is $140,000, and let's just say they get a $50,000 bonus, meaning that they're going to be making around $190,000 in total income. Well, that $50,000 that they're making is going to fill up this bucket and go a little bit into this bucket right here. So only that little bit that goes into this bucket would be taxed at 32%. The majority of the bonus, or most of the bonus, is going to be taxed at 24% because that's the one that was used to fill up the remaining of this bucket. So only that little bit that goes into here is going to be taxed at 32%. So that's my super simplistic explanation on how tax brackets work, and I train this with all my employees. Remember, if you want this copy of the visual as well, just type in brackets inside the comment section and I'll send it your way.